Hello and welcome to Policy Watch, your packed snapshot of the week's biggest business stories, their context, their relevance and policy impact. I'm Govindraj, Ethiraj. Inflation numbers have risen to 4.4% after hitting a record low last month. Now, higher inflation means that prices of everything you buy are rising and could rise further. Now, could that happen? And what are the broader policy implications? To understand what are the forces that are working to keep it down or pushing it up? Well, I'm now joined by Shubhada, Chief Economist at Yes Bank, and Sujan, Hajra, Chief Economist at Anand, Rathi, Securities. Thank you both for joining us. Shubhada, let me begin with you. The inflation numbers have risen up a little sharper than before. Inflation rising means prices are rising up. Is that something to be concerned about?
I think in the recent past, our focus has shifted instead of the headline annualized inflation to the momentum, because it's momentum which matters, because headline is going to carry noise all through. For instance, the previous month we saw 3.66. Clearly, that is not the real story. Inflation is not that low as it is being depicted. And the sharper uptick the subsequent month in September that we saw of 4.54, I think that is something which does not necessarily is reflective of serious uptick. In fact, if you track monthly momentum, it has eased somewhat, though it is still over 1 percentage point, but from 1.23 it may have eased to slightly lower. So I think there is going to be noise in looking at headline numbers, annualized numbers. It's better that we analyze more that how it is shaping up month over month. And from that perspective, we believe inflation is on a correction course.
Okay, so you're saying actually going downwards.
That's right.
Right, okay. Sujan, is that something you agree with?
Yeah, I do agree, and in fact, this is not just the CPI inflation. If you look at the GDP deflator, which is the broadest indicator of inflation, in fact, if you look at 1 quarter back, it was actually negative. The GDP deflator itself was negative. Even the last quarter, it's somewhere around 1%. WPI is in deep deflation for almost a year right now. So whichever way you look at, obviously the inflation is trending downwards, and India is not the only country where it's happening. It's more of a global phenomenon.
Right. Right. So let me quickly press you on that. Wholesale price index has been down quite sharply and negative for a while. Consumer price inflation at this point of time seems to have moved up, though as Shubhada says, if you look at it over a longer time period, it's actually coming down. How does a common man understand this dichotomy, if so?
There are two things in particular here. One is the weightage of fuel in CPI inflation and weightage of fuel in WPI inflation. Explicitly, the weightage on fuel in CPI is almost non-existent. Though in the miscellaneous category, you have some weightage for petrol and diesel, but overall, while the fuel is in deep deflation, which is impacting the WPI, it's not impacting CPI to that extent. So that's one reason. Secondly, obviously the food price, the impact of food price is different. Third thing is the services is not present in WPI.
Right.
Whereas the services inflation is also falling, but it's slightly above the general trend. So these two together is causing this.
Right. And services is something the Reserve Bank governor also has expressed concern over, because that's one area where all of us actually pay more for services or ask more for services that we render. And that's something that can...
Quite true, Govind, because we did see service inflation in the services segment move up quite sharply since June, because the tax element did come on board. And if you look and categorize it deeply, you see that there are 2 or 3 segments which are showing some sign of stickiness. Like, for example, personal care, or you look at education, you look at health services.
And education and health were the 2 areas the governor pointed to.
And that data continues to prove that point of the inflation remaining sticky. Now, that is where it becomes a long-term story, because obviously you're not going to be able to...
No, long-term good story or a bad story?
Good story, that you improve the supply side of the economy, be it for healthcare, be it for education or for personal care. So essentially, supply needs to definitely come on board, and that's exactly what the RBI has been talking about when it says that the government also will need to do its bit, having done a front loading of 50 basis points. I think government also, it has done well, government has been doing well, but obviously a lot needs to get done.
Okay. Sujan, so if we were to now look forward, given where we are in terms of inflation, and I'm talking about consumer inflation, what are the concerns that we should be focused on, and what are perhaps the opportunities, if one may call it so, particularly from a global economy point of view?
I think the biggest concern, of course, is on food prices. Because the food having such a large weight in the overall CPI. And secondly, if you see, we are sitting in a third consecutive cropping failure. Cropping season, two monsoon and one monsoon and one Rabi. Now the fact of the matter is that it's the reversal of your public policy stance which has led to this subdued food inflation. But having said that, say for example, you know, the evidence that the pulse prices are going up, the onion prices are going up, the prices of potato is extremely volatile. So given all these things, I think the biggest concern on the inflation front is on food.
So let me ask you there quickly. Have we done a better job than before of managing a bad monsoon or a 14% deficient monsoon?
There are various sides to it. From the perspective of inflation, we have definitely done better.
Okay.
But having said that, if you look at from the rural income perspective, obviously this is a negative shock because they are facing an output shock as well as they are facing a price shock.
Okay.
So therefore, if you look at the India story from 2007 onwards, which was going on, that was based more on the rural consumption story, and that was backed by high prices and also generally good agricultural season.
So let me put that larger question to you. Are we becoming better at managing the impact of weak monsoons and clearly unpredictability in monsoon cycles?
I would think in near term, definitely government has acted very deftly since last year.
Responsibly or because it was planned much better?
It was planned better because there was an anticipation of shortfall in the rain. So I think government was quite quick in offloading stocks from food grain warehouses, importing much more. Of course, there is a debate on whether they should have imported pulses much up earlier front, but the idea was also that acreage has gone up, so there was a expectation that output on pulses would get better. So managing the food economy has been quite good, but once again you have to look at how we are dealing with the lifestyle changes in consumption. The pulses output has remained static at 18 to 19 million tons, and we all know that today a lot of consumption goes into protein items, eggs, meat, fish, yes, but also pulses. And unfortunately, we haven't, and I'm not just saying now, but over the many years, we haven't done adequately on agriculture. How we need to plan our cropping, how we need to create supply chains, modern terminal markets, etc. I think that kind of planning ought to get greater attention so that we are, doing away with the shocks.
Okay, so you're saying both at the cropping level as well as the whole infrastructure. No, I'm saying the role between private and government.
Both.
Yeah.
I think
or the individual and government.
Improving yields, for instance. There are, productivity is one of the lowest ones for India's agriculture. I think that's where we need to really improve. And also, India is known to be growing first or second largest in many of the food items, but there's equal amount of wastage also. So I think it's a whole story.
And all of these sort of components really add up to what we look at when we look at food inflation, or the number we look at food inflation.
Totally.
So Sujan, we touched upon the global part, right? So one reason why things are under control here is because global prices of many commodities are also soft. What's the outlook?
See, so far as the energy prices are concerned, the general consensus is that while the energy prices can go up slightly from the current level, but if you see from a longer term perspective, every country is moving towards non-polluting sources of energy. Say for example, Germany is making a record investment in environmentally friendly sources of energy. So given that, so the demand, the mineral fuel on which we are extremely highly dependent on imports, there the outlook for prices from a medium to longer term is downwards. So given that, the global backdrop obviously is helping India control not only fuel, most of the commodities, for example metals and all, that is helping India to keep the inflation.
Right. No, but what's your outlook? Is it likely to remain where it is at least for the next couple of quarters?
Obviously, because if you look at the global growth outlook, if anything, the outlook is getting downwardly revised. So when your demand is going down, the prices are likely to go down, and at best they will remain flat. So from that perspective, I don't see much risk to inflation coming from imported inflation.
So if I were to now look at it external and internal, both of you are saying that there's not much of an external and definitely not an internal pressure on.
I think on global front, as long as China is the
consumption
point
is
of focus, where we are going to see revisions of growth coming in lower, I think commodities is some space that we will continue to see, downward pressures building in. So altogether, if you look at the deflation, even in agriculture products for that matter, why are we just looking at oil and, metals, but even globally, food inflation has been lower, and except barring one or two items. But overall, looking at the domestic and the global scenario, I think inflation is something that is getting managed better. And adding to food and fuel, more important is the core inflation, which has remained fairly stable. And that is because of the utilization is still low, capacity utilization is still low. We have weaker demand conditions, and therefore, we are unlikely to see a flare up.
Right. So let me ask you a sum up question quickly. For the Aam Aadmi, should there be concern when it comes to prices in general?
Yeah. I think food will be one sensitive item.
And if so, what should be done?
Food will be one sensitive item, particularly coming into the quarter or so with festivities, and so typically seasonal support is there for prices. So government has to take adequate and proactive steps in managing food. But overall, I think inflation is going to be a positive story as far as people are concerned.
I think for Aam Aadmi, it's always the growth which matters more than inflation. Because if you are talking about the bottom 50%, most of them have access to the subsidized public distribution system. So for them, the income effect is far greater importance than the inflation effect, because for a sizable part of their consumption is actually shielded from inflation. So,
but you're saying inflation. You're saying income is rising.
Income, so that needs to rise. That's the concern for Aam Aadmi. And if you look at the manufacturing production, if you look at the investment intentions, there are reasons to be slightly hopeful that the income levels, at least in the urban India, will be growing faster than what it has grown in the last 5-6 years.
Okay, last word, Shubhada.
I think, Govind, you need to do a lot of work on e-commerce and its impact to track demand, because the kind of huge volumes that one sees through e-commerce and representing the consumer demand, and not just in metros, but even in tier 2, tier 3 cities, I think there's a lifestyle change in consumption pattern and how we go and buy our goods. So I think that needs to be looked at.
And that's surely keeping prices down because of discounts.
Absolutely.
Funded by Silicon Valley, of course. But
yes, but I think the prices are therefore coming in subdued.
Right. Okay. Which is all good news for the economy, at least at this point. We need to go in for a break. Welcome back to Policy Watch. India's index of industrial production numbers have risen from 4.1 to 6.4% in the last month. Now, this should mean that industrial activity is picking up once again and the economy is gaining strength. More activity also means that consumers are buying more. Now, the question is, are these numbers a reflection of a strong trend or a temporary blip? More importantly, what are the fresh signals we are seeing from the economy as a whole, and what can the markets tell us about their expectations? To understand this better, I am joined by Shuchita Singla, Associate Director at India Ratings and Research, G. Chokkalingam, Founder of Economics Research, and Debopam Chaudhari, Chief Economist at Zyfin Research. Shuchita, let me begin with you. So, IIP numbers are looking stronger. Does that mean the economy is on an upswing?
The reason why the industrial output data is looking stronger for the month of August is because of two factors. One is obviously the base effect was largely supportive, and secondly, we have seen some bit of festive-led intermediate good demand that is coming through. Yes, this does indicate that there is some soft sign of recovery, but to call it a full-blown out recovery, I think
when you say festival-led intermediate demand, can you explain that?
Yes, actually it is actually a lot of intermediate goods have, if you look at the data per se, it's indicating that there is some intermediates that are being produced within the manufacturing sector, which is probably indicating that the manufacturers are beginning to produce so that there are the so that they can move on to the
downstream,
going ahead. So there is some bit of recovery there. There is some recovery in capital goods output as well, and consumer goods sector as well, but there are a lot of headwinds still. So we would say that the recovery is very nascent at present, and there are other factors which can...
We'll talk about the headwinds in a moment. Debopam, what we're trying to understand is also, what are the larger sort of the set of signals that are emanating from the economy, and what can we make from them at this point?
Well, right, the latest estimates of the IIP for August does look encouraging, and if it evolves into a trend, then nothing like it.
So therefore you're saying it's not a trend?
Right now it is not a trend. It's just 1 month when we have seen this significant growth. The last time IIP had a trend was somewhere in the middle of 2011, when it was driven mainly by improvement in manufacturing and capital goods. However, capital goods, the risky thing is capital goods is highly volatile. So 1 month it will grow at 30%, and the next month it will grow at sub 0%. So you cannot really rely on capital goods, and similar kind of a thing has happened.
And this is because people place orders for large equipment or whatever at one shot, and then they may not again.
Yep. While manufacturing, which is another component which is around 75% weight in IIP, is one of the early signals of whether IIP is going to evolve into a stronger trend or not. But manufacturing, if you look at the data this time and compare that with the trend that we saw in 2011, in 2011 there was a robust increase in basic metals, which has the largest weight even within manufacturing. This time basic metal is growing at a negative growth. So it's too early to say whether IIP will break out into a trend or not, but if it does, then it will be definitely good for the economy, and early signs of consumer sentiment is suggesting that there can be a demand revival, which will be seen in this festive season, and it will again further expand in the rest of the year.
This is what your own survey is telling you?
Yes.
Okay. And how would you contrast that to last year?
So consumer sentiment survey that we do it every month, the rally up to the period up to the festive month of September, which is like June, July, August, September, is the strongest in 2015 compared to any time that we have seen since 2011 when we started doing the survey. So 2015 is the strongest compared to 2011, 2012, 2013 and 2014, which gives us a confidence that maybe overall aggregate demand from consumers will improve this festive season and will continue for the rest of the year also. And since 60% of the Indian GDP comes from consumer demand, this will definitely turn the wheels for the economy.
Right. And we'll try and contrast that with the headwinds that Shuchita spoke about. Sure. Chokka, how are you seeing the markets respond to this? Actually, markets are perhaps already anticipating better consumer demand. Would that be fair?
Certainly. I mean, I agree with them that,
or is it supply driven? Yeah.
Monthly numbers are highly volatile, IIP number. But I get a lot of comfort and confidence that industrial economy would revive from IIP number as well. If you look at the cumulative figure, whether you look at overall IIP or manufacturing, there is a tremendous improvement. And second, even for August month, if you look at the manufacturing sector, within that, out of 15 industry group out of 22 have turned from negative to positive. Similarly, use-based classification also, if you see, the segments which account for 50% of the total weight, they have pulled out of negative, degrowth from degrowth to positive growth in the month of August. Apart from that, look at the excise duty collection, 69% growth. Indirect tax collection, overall 36% growth, which is 2 times the budget estimate. Of course, a proportionate, significant proportion is mainly on account of duty high, but still there is a, tremendous, significant trend, which also means the government will have lesser pressure to spend on plan expenditure, I mean, earlier they used to cut down the plan expenditure. So all this would point towards a robust demand-driven industrial economic turnaround, and therefore, market would continue to rise. That's my firm view.
Okay. Shuchita, you talked about headwinds, right? And Debopam is saying that he's seeing the best possible potential consumer demand numbers in 4 years' time.
Right.
How does that
I think what we see in this current year and going forward into FY17 as well, export growth is continuously decelerating. We have headwinds coming out of the Asian economies and rest of the world as well. Secondly, we see investment activity not picking up in the near term. There's a lot of excess capacity within the system. If you look at India per se, and even if you look at capacities which are there in rest of the world, so those will probably keep investment activity benign. Where we see growth coming from is the consumer side, as well as government spending to some extent. So we expect growth coming in largely from these two areas.
And to what extent will these two forces, that's consumer spend and government spend, counterbalance all the other headwinds that you spoke about?
We still see FY16 GDP growth at 7.4% this year, which is reasonably strong. So yes, we're seeing some recovery, but it is not likely to be the kind of growth we used to see a few years back.
Right. So Debopam, to what extent is the weakness in the global economy going to affect the IIP numbers or the industrial output in India?
Interestingly, in the bunch of emerging economies that we usually follow the BRICS group of nations. So these bunch of emerging economies, there was a group of emerging economies who chose the export-led growth way, and there was this group of economies which chose the internal strengthening of internal manufacturing roadmap. India falls in the latter category. So we are not that dependent on exports as well as, so we are not impacted much. We are impacted, but then on a relative basis, the extent of impact is much lesser compared to a China or a Taiwan or even a Brazil. So I don't see a very significant impact of slowdown in global growth leading to a slowdown in exports, which will impact the Indian IIP. Indian IIP would continue to be fueled by Indian consumption, domestic consumption, and Indian consumption is all set to improve compared to the previous last 4 years.
Right. No, IIP numbers have risen after 3 years, I mean, for the first time in this fashion. Now, the question is, what else remains to be done in order for us to be confident that this is a more secure trend?
I think
or a secular trend,
one is obviously government spending, because if the external sector is not picking up, we need specific government action in various areas, be it roads,
which has already started.
Which has already started. So that is something that we are already building into our numbers in terms of growth. Second, obviously, till now we have seen interest rates being cut by 125 basis points by RBI in the current year. That needs to transmit into, or the transmission mechanism has to work so that interest rates from the banking sector also come down, and that kind of feeds into some kind of consumer led retail pickup in loans, which will obviously feed into consumption demand. So that is the transmission of interest rate cuts.
So I know that you're not saying cut more, but transmit what has already been cut.
Yeah, so we've seen RBI actually front load monetary policy action in September. We don't see rate cuts coming again, at least in the foreseeable future, but we do see some transmission of the impulses coming to the economy.
Okay, Chokka, anything that you would like to add to see this sort of a more robust economic recovery?
See, the government has to improve the planned spend, and they have to shut down the loss making PSUs. And third, they have to aggressively divest. You look at Hindustan Zinc, when the stock was divested, the market cap was hardly 1,000 or 2,000 crore. So they have to encourage more and more private participation. As far as market is concerned, I firmly believe that in the next 3 to 6 months, the mid-sized companies would lead. Unfortunately, the large companies which are in the broad indices, they suffer from the overcapacities in China. Whether you take metal resources, and then we have domestic problem of the bottlenecks in infra. So therefore, large number of companies in the broad indices, they would continue to suffer, as far as the earning limitation is concerned. So I think there will be a rally that will be led by primarily mid-sized companies in the short term.
Okay. So Debopam, let me start with you. If you were to look at the 1 or 2 factors that might either push things up or down in the next 2 quarters, what would they be?
Well, 2 quarters, I think we are all set because the festive months are down the line. But then from a long-term point of view, what I think should be done is, along with this push to make in India, there should be a push to some of the service sector industries which has a huge presence in the Indian hinterlands. This would be transport and tourism. So we are severely lacking in good amount of expenditure in these 2 sectors, which has the potential to provide a lot of employment. And talking about employment, we need a lot of expenditure in improving our skill generation or skill development. The ITIs needs to be modernized. We have to ensure.
But all of this is not going to touch IIP, isn't it?
No, but then if production improves, if hiring improves, then definitely IIP would be impacted. And since 75% of IIP is manufacturing, and manufacturing is related to employment skills of the labor there, developing skills and developing the ITIs will directly impact IIP.
Okay, Chokka, what else needs to be done and what's unfinished?
I think the most important issue, according to me, majority may not agree, allowing the free import of gold. You know, if you look at the net import of gold in the last 5-6 years, it runs into hundreds of billions of dollars. So you have exported capital to foreign countries and imported the dead assets. I think this is one of the basic reasons for, you know, the aggregate demand to go down. And I believe the government should, you know, completely stop import of gold. Then the money, instead of outflowing, can circulate inside the system and can give big boost to the aggregate demand.
Okay, so when you say stop, how do you stop?
You know,
you mean disincentivize or physically?
Yeah, disincentivize or even restrict. I mean, like for instance, you know, Indonesia it is allowed. You know, upper middle class people also import gold and make a quick money intra-week.
Okay.
So
right. So basically, you're saying free up capital that's lying within the country instead of importing.
Ultimately, India is a capital-starved country.
Yeah. Right.
So whether you take in rupee term or dollar term.
Right. Okay. Last word, Shuchita. Tasks ahead.
I think we are in a sweet spot to some extent. Commodity prices are lower. We can set up infrastructure at a pace which China did a few years ago. And I think this is the right time to kind of go ahead, give a government-led push to infrastructure development, which can actually fuel consumption demand and fuel up the economy.
Right. So the focus in some ways comes back to the government for both spending and moving quickly on the policy front. We've run out of time. Thank you so much. That's all we have time on Policy Watch this week. We'll be back next week, same time. Thanks for watching.